there. Just a minute. I think that should be set up in a few. Then I will mute. Okay, good. Perfect. Okay. Good. Yeah, I think we are good now. As I was saying, the purpose of the webinar was to look at the performance of the only late that is available to retail investors or individual investors like yourself and myself. Though, as we did a poll to ask how many investors do we have of the Acorn I-Reit in our communities, we found not so many investors in the late, this particular late, but we got a response of, yeah, I'm not invested, but I'm interested in late. So we'll just discuss what lates are, and part of the presentation, just a couple of the minutes, we look at the performance of the I-Reit, the good, the bad, and everything in between, just to help you as a retail investor to make an informed investment decision. For those who are new, probably referred to this particular session by their friends, I'll start with introducing myself. I'm Daniel Kemita, though on social media you find me by my family name, that is Wakamiro. So I'm in the finance and investment space. So we guide investors on how to make informed decisions, and how we do that is through educative forums like these ones, or through our Facebook page where we comment on matters finance, the economy, investment, business, and everything in between to help investors make better economic decisions. We had a commitment to make sure zero consumer financial literacy. Despite us hosting personal finance classes and consultancy, taking individual consulting clients, we drive to try to host these webinars every now and then. This is the third, I think, this year. One seminar and 3 webinars. Just to try and one seminar, and this is the 4th webinar. Just to help our communities to learn about the investment world. So I take this opportunity to welcome you all. As I had mentioned at the start, please feel free to submit your questions around real estate investment trust, or if you had invested in the ILAM for I-Reit, which was by Stanlib at launch. Feel free to ask what went wrong. If you have invested in the Acorn late, we would be glad to hear what question you have. If you we are interested in a late, but there is a question that you have, I would be glad to hear about it. Perfect. Also, Gideon is asking how much to invest in rates from other countries. So good. We'll respond to that. So feel free to engage in questions. So let's begin. And a real estate investment trust will be allowing pooled investments. So we all come together, and then the monies that we have put together are invested in income generating real estate assets. So what you know, maybe those who are in money market funds, we pull in monies, and these monies are invested by a professional fund manager to invest in, say, what we call money market instruments. So treasury bills, commercial papers, treasury bonds, um, corporate bonds, the fixed deposits. So a money market fund is a pool of funds which are invested in by a professional fund manager and invested in those what we call money market instruments. Now, I-Reit will be taking a similar approach. We pull in funds, though whatever we have pulled in, this is invested in real estate sector. So we will have that professional manager, or who we call a late manager. We will have a trustee to probably secure the interest, purportedly secure the interest of the investors. We will have a custodian. So it is just a fund, though the investment class is what will differ. There's something maybe we could mention, maybe like the difference between it and money market fund is also, of course, the asset classes differ. So you have on one side on one side you have an investment that is investing in money market instruments. On the other side, you have an investment that is going real estate. Now, the other difference will be when you are doing a money market fund, you are dealing with the fund manager directly. So in this case, that you went to CIC, you went to Sanlam, you went to Old Mutual to invest, to buy units of the mutual fund, which is the money market fund. But in the case of I-Reit, majority on how they are structured to work, you are buying shares of that particular company, and the majority of them, certainly here in Kenya, we don't have so many of those, are investing in real estate, and their shares are traded in an exchange. So majority of Reits will be trading in an exchange. So you are buying an investment vehicle that is investing in real estate, but these units are listed in an exchange. So you trade them just as we would shares. Now, of course, if you have bought shares, you become part owner of that particular company. You share in its profits and also share in its losses if you are not performing well. If you are an equity owner in a company and we have too much debt, then in case of a liquidation, you are coming last because we say equity shareholders the last. You are the owner of the business. So that is how probably they differ. But the structure, it is a fund, a trust, could be similar. So in Kenya, we have what we call an I-Reit. So an I-Reit, this is an income rate, which has properties that are generating income. So rental, they are earning rental income, and we distribute part of those rental incomes to you. So you'd set up a vehicle and acquire properties, or put up properties, acquire properties that are earning rental income. Now, for development rates, these are engaged in the business of acquiring property, acquiring land and building, within real estate. So beyond the borders, we have different rates. We have what we call M rates, or mortgage rates, which would earn you interest. So we pull in resources together and we lend these resources to companies that are engaged in real estate or something. Beyond the borders, we have gone from malls, apartments, rental. So you'll go find rates that are engaged in putting up hospitals, Reits that are engaged, like in the US and Europe right now. The hot thing in real estate is data centers. So you'd go find real estates that are really focused on specific, that is, for example, uh, that towards data centers. So now, why do we go to real estate? Why do we invest in real estate? So the benefits of investing in these real estate investment trusts. Now, today, if we asked you to put up an apartment, it would require you the acquire land, which might not be coming in cheap. It would require you to do the construction, which might not also be coming in cheap. There is experience and the skills required around the same business. And after you have acquired these, and after you are done, now we are also interested with the management, the servicing, and everything. So, due to the capital intensity of the real estate business, you'll find it being prohibitive to many retail investors or individual investors who are only able to put up maybe say like $1,000 or 100,000 Kenya shillings. So the rate is helping us to pull monies, and then these monies get invested by a professional fund manager. So I contribute 20,000, $100, I buy some shares, and then have these being put up the real estate. So we say on how the rate is marketed is with only 20,000, with only 5,000, you're able to invest in the real estate sector. Well, so without the need for a couple of millions, with just few thousand of shillings, you have invested in real estate. Yeah, so where are we going to real estate? To earn passive income. So if you have, say, the property is appreciating in value, so you are earning, so your units could be growing in value. If you have yourself, let's say, a late that is earning lent, so income, so this is distributed to you as the shareholder of the company. So providing you with passive income, and it gives you also what we call diversified exposure. So could be having two Reits in my portfolio. One is doing the commercial space like malls and whatever. Another one is doing data centers or anything. So giving you that diversified exposure. And the specifically, it could be also be having different properties within it. So if you take the example of Ireland, had different commercial spaces in different structures within it. And of course, you are getting what we call professional management without the need to have that direct ownership. So real estate becomes difficult. If you go for an apartment, then managing all that becomes quite hectic. Maneuvering the challenges within that particular sector or something becomes hectic, and that is where you find individuals going through Reits. So here in Kenya, we have some Reits. I'll just go briefly about around them in the next couple of minutes. But now in Kenya, we have what we would call restricted Reits and unrestricted Reits. So we don't have very many options, though whatever exists, we'll talk about it. But outside, the business of Reits is huge. It's big. So we'll get to talk about that. Now, real estate, before I even talk about Reits, real estate has been sold through something I call a dogma. And we have very many dogmas, whether it is in investment, whether it is in personal finance, whether it is in society, in our societies, other factors like family and whatever. A dogma, something that you would want to believe in, could be there or might not be there. But we're going to have to test that theory. And one of the dogmas in real estate is that land will always appreciate. So there is that dogma. And I would want us to do away with the dogma as early as now. That land will always appreciate. Another dogma in business is you are told start staples. So, food, clothing, whatever is important, like consumables. So you're told start a wholesale business of food or start a fast food joint or something of that sort. And you're told that people must eat. That is the dogma when you're told to go into the staples business. People must eat and all those kind of. Now, yes, people must eat, but people have eaten by depending on what we call relief food. Land will always appreciate. We could test that. If you buy an overvalued piece of land, then it would take you unnecessarily long for that particular piece of land to appreciate. There's something that I want to show here, and just to do away with those dogmas. So I will go to the American economy and take 500 top companies in the US. So top 500 companies, where do they come from? Could be anywhere, could be financials, could be tech, could be real estate, could be utilities, energy, manufacturing, materials, whatever, but top 500 companies. Let's split those as per the sector and then see how these companies have performed in the last 5 years. So, investment is not a one-day affair, so we can't go for like 1 year or 2 years. Then let's look at how they have performed. Now, the 500 companies, the total, have gained 92%. So they are up 92%. Now, let's look at the different sectors and how they have performed. So consumer discretionary, we refer this to as luxury. Consumer staples, this is the day-to-day. So you have luxury, you have day-to-day. Now, luxury has returned 77%. Consumer discretionary sector has returned 77%. The last 5 years, consumer staples has returned 38% in the last 5 years. So the dogma, people must eat, is not synonymous that your fast food joint or the wholesale business dealing with food stuff or staples will be profitable. That is not the case. The dogma that real estate land will always appreciate. The real estate sector has returned 9% in the last 5 years. So 9.54. So this is almost 2% per annum in the last 5 years. So if you compare with, if I say, let me invest my money in banking or in financial. So in the last 5 years, the banking sector or the financial sector is up 100%. So divide by 5, we are talking of 20% per annum in the last 5 years. So away with the dogmas. Real estate or land will always appreciate. If you get it wrong, then things could go haywire for you. You could tell me, please, if you are there in the chat box and many of those dogmas that we give, please feel free to share with us in the chat box. The other dogma I can remember offered is that people must eat. That is not synonymous that these will be profitable. So the reason why we are saying away with the dogmas is that you could be sold a real estate investment trust in the name of this will always appreciate. If you have yourself a company that is not performing well, if you have a company with overvalued pieces of land, if you have a company whose management is inefficient, if you have a company that is probably cooking financial statements, then you won't turn profitable. You won't turn profitable. So if you have yourself a dogma outside there that we talk maybe in investment or in the society, I would be glad to hear about that. But two, uh, start a business of food. People must eat. That is not synonymous that your business will be profitable. The other is land will always appreciate. If you get it long, then you can almost guarantee yourself that you won't end up profitable. Good. So we are here. So I wanted to share this. One of the Reits in Kenya, so this listed in 2015. So a real estate investment trust. So we have mentioned this is a company that invests in real estate. So Ilam I-Reit listed in the year 2015. So this is a company with the real estate properties, and they sold us their shares. So in 2015, this was the last IPO in Kenya. And this cost us something we call, maybe we should go and tell them we need, the IPO drought started here. Maybe we need to go to the IPO and try some, the African mitigation to try and see what cash these cost. So listed at 20, so the valuation of the company was at around 3.6 billion. So somebody who probably wondering what an IPO is, that is an initial public offering. So when the company goes public for the first time, so you could take, for example, Family Bank, if they say they are going public, they would offer us their shares, part of their shares to the members of the public for the first time. So this was approximately valued at 3.6 billion. Now, the reason why maybe I, as an investor, I would want to talk about the company, how much it is valued. I will just mention that in a minute. In only 1 minute, probably, because that is not the business why we are here. Now, Ilam was selling us their property at Gitanga Place, 67 Gitanga, that is in Lavington. They have a property in Donholm, Greenspan Mall, and they had another property, Bay Holdings in Enterprise Road. When they offered their shares in the IPO, that is what they were selling us. Now, there's a question I want to ask myself. Are these properties valued at 3.6 or near anything 3.6? So when you buy, say, for example, an NVIDIA share at $120 a share, what you are saying is, I'm buying this business at 3.2 trillion US dollars. When you buy the Safaricom shares maybe at 17 shillings, what you are saying is you're buying the business, Safaricom, at 600 billion Kenya shilling or whatever its market capitalization. So that is what you are valuing the business. We tell students who come to our personal finance classes, it is a very simple thing, valuation that you do in your day-to-day business. I'm selling you a bakery, and the bakery have quoted it at 3.5 million. You do it every time we are on the social media platforms and we see your comments. So you hear somebody saying, I'm selling a spa, I'm selling a bakery, I'm selling. When you hear people, when you see that kind of comment, then you post and you go to the comment section, you will know people know how to do valuations. So people start by asking, well, are you selling this business on the basis of assets? What assets do you have? Or are you selling this business on the basis of it is making profits, it is making money? How much profits have you made in the last 1 year? So when you tell me that you're selling me your company at 3.6 billion, then the question that I would get to ask is, well, what is the value of your assets? Because it is your assets that you are selling me. Or alternatively, if you are selling me, say, that bakery at 3.5 million, and you tell me you are making a profit of 500,000 per annum, then I know I have 7 years to recover back my money, or else your profits will grow tenfold, so that's the business to make sense. So when you an investor in the equities markets, that is something that you should be holding at the back of your mind. You should always be doing it. Either we are buying this business because of its assets, or we are buying this business because it is a profit, it is minting profits. So perfect. So after the launch, so we could ask whether the business was valued at 3.6. Now, 2016 to 2019, we have the price decline of these shares in the NSC, so dropping between 6 to 8. Now, the real estate was performing poorly, but also the rate was non-forthcoming with communication and all these kind of things. So we also have tenancy vacancy impact. So we have mentioned one of the properties in Donholm, that is Greenspan Mall, had the anchor tenant vacancy. You know the business of malls in Kenya. So unless you have an anchor tenant, then you will be significantly impacted. So this impacted the mall. And in the presentations, they were always saying that, oh, we had a poor year because we didn't have an anchor tenant or something of that sort. So this also brings us to something else that is very important, that when you are investing in real estate, you build an apartment, something known as occupancy level. There's something we say happens with investors. So investors tend to have what we call planning fallacy. So when you are saying, I will build these Mabati houses or this block of apartments, you work with that you will have yourself 100 or 20 or 50 tenants, you are working with 100% occupancy level. Now, if you go to real estate directly, you go build occupancy level. If you don't hit it, then you'll have yourself challenges, especially if you had made commitments like financing. So when you are taking a loan, you were planning that the interest repayment, you are planning that on 100% occupancy level. We call that planning fallacy. So overconfidence getting in between. If you want to see planning fallacy, the next time you go to the garage to have your vehicle repaired, ask your mechanic how long it will take to repair your vehicle. In most cases, if you have done that in the past, what you find is 2 hours have turned to 2 days. So you get yourself probably 400%, 500%, or 1000% overlay on time. So if you go to real estate, you are planning to build in 8 months, and 8 months turn to 3 years. So you get an overlay of time. This also, the overlay of time as it is happening, it is also overlay of, the capital that was to be injected. So we are working with planning fallacy. We are working with 100% occupancy that you could only be profitable at 100. So if you have occupancy level at 70%, then you are impacted. You would want to think of that. Now, as all these challenges are happening, like the poor performance in the real estate sector, we also have what we call irregular dividends, so low irregular, and with longer periods without pays. If you remember these periods, this is when we had one of the supermarket chains, that is Nakumatt, having itself some challenges. So anybody who had a mall at that time, the challenge was that the big player in the supermarket business is out. Then there's so much space that we have had to discount the cost. So this was challenging the incomes, was challenging the valuation. That was such a huge challenge. And that is why the units are declining. Markets, we are trading at a discount. So you have yourself, and of course, everybody would be concerned if you have yourself, like the property market depressed, then you would want to sell and move on. If you are not getting good deals, then you would want to sell and move on. and all this. So this is where you could probably even find the units trading at below the net asset value. Liquidity issues, so the shares are rarely traded. Then, of course, as I maybe for liquidity, so then it is not only for Ireland, but Nairobi, you only find a few counters that have enough liquidity to enable you join and exit at wish. So you are talking of banking. You're also talking of a few counters, a couple of counters in banking, and then you find yourself with a few counters like tech or telecommunication. This is Safaricom. Uh, Otherwise, there are some units that have very thin liquidity or thinly traded, and this could be impacting these retail investors. So in 2023, the ALAM came with a proposal to delist. So these had been trading in the main segment. So, and then there was that proposal to delist from the market. And yeah, the proposal went through to get this from the main segment of the NSE. And that proposal, what it was reading, that this would fail now not trade in the main segment, it would trade in the unquoted securities. But there was also something, a proposal there that we would get non-professional investors. So there is a word that is used in the capital markets. We don't like it. When you say non-professional investors, then it doesn't make sense. I call them retail individual investors. That is a better term. So the retail individual investors who were doing less than the holding units that are of less than 5 million were to be taken over. So the units were to be taken over. So the buyout was done at 11. So if you factor at IPO, if you joined in 2015 at 20 shillings, and then in 2023, the 2023 end, you have been bought out at 11 shillings. Then you could see, and throughout, we didn't have good performance in terms of dividend yield or something of that sort. This is how, and this is a story of majority of us in real estate. So if you buy an overvalued piece of land or you get financing loan in terms of loans, if you get the planning loan, then it is years, 5, 10 years, then you end up with nothing. So you, as we said, away with the dogma. Now you can see why we are saying away with the dogma. So I'll just highlight through some of those rates. So one of those was the Island Valley rate. I believe that once you see some of the property values, some of the properties. So there's Greenspan Mall, and this is in Donholm. They also have something in Lavington. This is 67 Getanga. They also had another property at Enterprise Road known as Bay Holdings. So that is one of the lakes that is in Kenya. So this was an income lake. They owned properties that are income generating, and from the rental yield, they pay you some returns. So as things stand now, this is not available to investors who probably are not doing 5 million and above, buying units worth 5 million and above. So we call these a restricted rate. So we'll also look at another rate. So the Acorn will go for the company Acorn Holdings. And this has two rates by one company. So these Acorn Holdings have a development rate and an income rate. So the Acorn rate does development, and the income rate acquires. So the development rate will buy a piece of land, build the student accommodation hostels, and will transfer those to the income rate. The income rate now will lend them out and earn some income and pay you part of those incomes. So you could have come across what we call Kejani or Kwetu. Those are brands and that company, Acorn. So you, by now, you know what rates we have. So the development rate is restricted to also investors who are doing 5 million and above. The income rate that has been sold to retail investors like yourself through a platform known as VUCA platform. So if anybody registers on the VUCA platform is able to buy the units of that particular rate. Perfect. Now we move on now. So one is restricted, the development rate is restricted. The other is available to retail investors. You can do small amounts. We also have another rate, and that is the LAP Trust Imala, which is restricted. So at the launch, the units were held by the promoter, and he only transfers, if he transfers those to investors, professional investors, that is what they call them. The professional investors doing 5 million. So as of now, probably we could say that the rate that is available to individual investors is the Acorn I-Reit, which is marketed so much to retail investors. So yeah, now we jump to talk about the Acorn later. Please. Now we need to onboard, like register and the whatever. So Evelyn, you might not be able to give the demonstration, though it is simple. That you register. The usual way we register on platforms, so you give your KYC details, that is know your customer, and you top up your account and you get to buy the units. Maybe I should have said at the start of the session that this is known by a majority of by a majority of the students from our personal finance classes, that I resist the urge to market any company or any investment. So even when we are learning about ILAM or learning about Acorn or something, I might not go to the part of this is how to invest, or like, okay, I know there's need to learn how the A, B to D, but we would resist that urge so that we don't feel like marketers of that particular product. So in real sense, what we have done is we educate, you get to know the underlines, and then you are able to go now probably pursue the company. In also good, I think that is the best way to say it, that we teach our students and then we tell them, hey, please go ahead and now pursue the company itself if you want to onboard. So that limits our liability to just up to education. Now, everything else that has to do with the investor. Why that? Because we don't want at the end of the session that we are giving you forms or links that you go on board on an investment, then we earn a commission out of it or something. We are not in that business. So anyway, it is a very simple process actually to onboard on that platform. Good. Let's move on. So these, I think another comment there. So Ruth is telling me that people always pay rent for rentals. I know, but another dogma, there's another dogma, especially if you find a person going to put up mabati houses. So you hear people, someone telling you, rent of 2,500, people will afford. Those will fill in a day or two, or in a month or two. That is not always the case, and also the assumption of that that will not be defaulted. That is an assumption. Actually, the people who default most are the we call them low income earners. Those are the ones who default most. Good. So if you have a question, I would be glad for you to drop it in the chat box. I would be glad. Yeah, matatu business, like you will always make money. Another another dogma. Uh, in now you have, I think you are, investors are getting very informed. So every other time you hear somebody saying, oh, you can join matatu business, you will make a lot of money. Now people are saying, kwa cloud, mambo ni tofauti. I think that summarizes everything. So let's talk briefly of the Acorn I-Reit. So this is focusing on student accommodation, and of course, we have majority of investors like yourself showing interest around it. Then you can tell from the polls that we had conducted, yeah, I've not invested in one, but I'm interested. So the student housing or accommodation, if you compare those with the commercial rates, so this will be operating with high occupancy rates, especially if it is targeted to be near student or academic institutions. And there is higher predictability of the occupancy. Like you get yourself enrollments in universities, so you are almost certain of the housing needs. So there is that predictability. And of course, the rate is reporting half yearly. So now the transparency is an advantage both ways to inform your investment decision, whether true or not. So what does that mean? That if a business is reporting to me every now and then I have financials to make an informed investment decision. So that makes everything so simple and easy. So they have a dividend policy that they should be doing 80% of the net profits, giving those as returns or as dividends to investors. So yeah, now, despite the advantages, could be having a lot of advantages, and this is the language of the marketer. My language is, now we would look at the figures. How have you been performing? Maybe in the last 1 year or something. And that was the basis of us coming to or preparing this session. So we have what we call rental income growth, which is at 47. Profitability increased by 40% to around 555 million. The rental yield jumped from 8.2 to 10.2. Growth of assets by 20 to around 11.1 billion. Now it has had what we call stable occupancy rates. So this is from the company reporter. I'll show you where to fetch the company reports. If especially you are an investor in that particular rate, then as probably we have told all our students in our personal finance classes, you can be, there is some passiveness, actually another dogma when it comes to investing. So somebody lied to investors that there's something known as passive investments. You won't go to the field to, if your company is an agriculture company, you won't go to the field, of course. If your company is a banking company, you won't go to collect debt. If you have a rate, you won't go to collect rent or pursue whatever. But the passiveness of, you won't check financials, you won't follow how the company is performing, you won't follow up on debt and all these kind of things. That is something we should probably get over in this century. Look at, for example, some of those failed circles. So there was one circle there that was being requested by the Commissioner of Circles to prepare audited financial statements for the 3 years that it has been operation, and the Commissioner of Circles freezed operations until this has been done. So these passive, where did these passive investors, who, when they go maybe for annual general meetings, they don't even care to check whether this company is publishing their financials. This kind of passiveness is what gets us into problems as investors. So there are investors here probably who have bought shares of banking sector. So the banking companies reported last month, and this investor doesn't care looking to the financial statements. That kind of passiveness, that you are in a mutual fund or a money market fund, you don't check the fact sheet to see whether there is a change of allocation. You don't check the fact sheets to see whether we have growth of the assets under management or something of that sort. Your company reports its financials on the newspapers every now and then. That kind of passiveness is what we want to do away with. So the investors, or if you have invested in the Acorn I-Reit, they reported their financials last month, then maybe it is important for you to get to check on how your company is performing. Either way, so the higher, good occupancy level, they had also portfolio growth. So they acquired the Kwetu Hurlingham and Kwetu Abadeas, and these are being moved from the development rate to the income rate. The operating expenses grew with around 14%, and so administrative expenses, which had grown by 34%. Though what are those operating expenses? So staff costs and all that. Though there is what we call fund operating costs. So the late manager, the trustee, the custodian, all these draw a fee. So these decreased by around 23%, which are now balanced whatever had increased here. But it is loans that went up. So loans grew by around 65%. And it is short-term borrowings that grew. Now, the shareholders' funds increased by around 10%, which is as a result of revaluation, notably in revaluation reserves. I will get to talk about revaluation in a minute, because this is something that an investor in Reits needs to know or always have at the back of their mind, not only in Reits, but also in companies. Like you have yourself a company like Centum Investment that has real estate projects. You have a company like East African Portland, which has large holdings in land or property. So we'll talk about that. So yeah, the return on assets was at 5%, and the return on equity, which was 1.4, grew by 1.4 to 6.8. Now, yeah, strong demand in the student accommodation and also the acquisition of all, bringing in more projects, so strategic portfolio growth. But now the balance. So that was a marketer. So it was a marketer telling you about the advantage and all this. But we need a balance. So you need to hear both the positives and the negatives. So let's talk of the risks. So debt increased significantly, and you would be concerned about that. So in our personal finance classes, we have taught our students that you, the equity shareholder, is entitled to what we call residual claim. So if your debt grows significantly, and at one time we liquidate, then you, the equity shareholder, would come last. Debt also, think of your residual claim that we first pay interest payment on debt before we distribute dividends. So you are also getting what we call a residual claim. Now, if you have high debt levels, interest expense will also grow, and this could impact you. So let's just see, so the debt level growing, let's see how that impacted what we call the finance cost. So we have what we have here, the Acorn student accommodation, so the income rate, so the consolidated statement of profit or loss and other comprehensive income. So what we have here is finance costs. So the finance cost grew from 127 million to around 440. So the growth of debt impacts. So even whatever you end up with, because what we have there is interest expense went up, and it reduces the profits that whatever you would earn. Yeah, we know that real estate is capital intensive, and of course, you gotta have, you can't, you say you can't develop without loans, yeah? Okay, that's okay. But you would take note that it doesn't grow unsustainably. So the administrative expenses grew significantly. And if we don't control that, then we would have ourselves a challenge. Now, the best way as an analyst, how we have done that has always been that expenses should grow uh, not as fast as the income is growing. So we have a business. So I'll just take your shop. So adding, if tomorrow you add another, say, like 2 clients. So if you acquire 2 more clients, then you are not increasing your costs by much, or I could take like banking. If you take that bank, your company or whichever company you have bought shares in banking sector, where one of their branches maybe in town can increase clients maybe by 10 or 20 or even 100 without the need of increasing, cost significantly. So that is something maybe you can borrow, that the growth of cost should not probably outpace the growth of revenues. Yeah? So you can have that at the back of your mind. Now, let me now mention something little about revaluation gains. So, and to talk about revaluation gains, I want to engage you because, of course, what is the purpose of us doing the class without probably getting to talk briefly about having you engaged. So there is a question we ask students coming to our personal finance classes, and it is a very simple question that we ask them. Now, let me see which of my friends are on the call. There is one I had seen the registration from my village. I would want to uh, use them as an example. Anyway, let me use my friend Jacinta. So Jacinta buys a piece of land in the area of Utawala and buys that piece of land at 3 million. So 2 years later, we ask our friend Job, who is in real estate, a real estate guru, knows much about valuation. So 2 years later, we asked Job, how much is this piece of land valued at? So Job, can you do an assessment and tell us how much this piece of land is valued at? So Job tells us that this piece of land is valued at 5 million. So there's a difference in valuation of 2 million. So the simplest question we have always asked our students is, Jacinta piece of land has grown in value from 3 million to 5 million. Is there money that she can take me out for maybe some milkshake after the class? Somebody, please feel free. Tell me in the chat box. It is a yes, no. Is there money? Please feel free to engage. I would be glad to hear. Yeah, yeah. Somebody else? So good. Thank you for your responses. Yeah, this have link around to the respondents who have come to our personal finance class. There's no money to it is perception. Good. It is perception gain. The UNICEF tells me no, it is not yet realized. Jacinta also says Daniel utatembea because there is no money to buy you a milkshake. That is true. We call them paper profits, and that is what revaluation gain is. So these impacts companies with what we call assets that could get revalued. So even in finance sector, a company, for example, a bank or an investment bank that is holding on to bonds would get their assets, financial assets revalued, or in real estate, a company in real estate would have the assets revalued. So if you think of East African Portland, so they have very huge tracts of land where they mine the raw materials, clinker to make cement. So they have huge tracts of land. So in their financial statements, you will always find revaluation gain. So we could use East African Portland as an example. So East African Portland, East African Portland, cement company. There, and you will get to see how these all investor relations, that is how you search financials, so that you just go to the most important part of that particular website. How comes not yet to the website of East African Portland? Sorry, it is taking me long to get there, but I can always go through the website. Let me see if I can get that. How far can that be? Well, did somebody bring the website down? Okay. Anyway, well and on, I could just highlight that. So the Portland, the company, has been struggling. So you could probably be knowing the issues around mismanagement of the company. You know, if you have yourself a company that is owned part by the government or part by the likes of NSSF or something, then you will always get those issues around mismanagement or something of that sort. It happens. It is that what happens when you have yourself a business, you are in business, part of the shareholders misbehave. So we say part of the shareholders are not of good character, then that is what happens. So if you look at East African Portland, the group, in 2023, they made a gross loss of 956 million. That was their loss. Now, the gross loss, the then operating expenses, so they got deeper into the loss territory, so with around 1.3 billion in loss. So some 2024, so the same, so loss from operations, so they are at 1.6 billion in losses. But this is changed, that story changes with the fair value gain in investment property. So it is the same question that it is the same question we have posed there with Jacinta, the case study there with Jacinta. So we revalued her assets, her piece of land, then we say there is a fair value gain on the investment property. So this is the 3 billion. Now you see what 3 billion has done. It has written off this, and this business has ended up saying that it has made a profit of 1 billion. Though, as you said, there was no money for Jacinta to take me out for a drink like soda or coffee. The same thing will happen here. This business will not have money to distribute to its shareholders. How does that happen? This, you called them paper profits. So the valuation gain, now I'll just go back to the class. So you can always check a business that have real estate property and see the impact of fair value gain. So you can jump to the financials of the Centum Investments Limited, and you'll be able to see that. Moving on, so these rates have been shown unrealized profits from the property evaluation. So it could inflate profitability with no cash flow. So one, there could be no cash flow. Secondly, there is no money to distribute to you. Thirdly, the unfortunate thing So this is, I think I had mentioned this back around 2022 or 2021, that revaluation gain could probably see your net asset value growing. So you are told your units are appreciating in value. But the most unfortunate thing is that this could be tested, especially if situations change. So you could have probably times when interest rates are not doing well, or the economic outlook is not good, property, whatever, the property market is depressed or something. So the perceived growth of your units because of revaluation gain could be lost. Also, and that is what you find, if you look here, then you have revaluation gain of 644, jumps to 3 billion, could even go lower. So you could even find revaluation loss, and this would be impacting your investment, even the value of those investments. So one of our teachers, so one of my teachers, and that is Benjamin Graham, was teaching something profound from his book, that is Securities Analysis. And he was saying that you would want to do what we call financial statements reconstruction. So when a business like East African Portland, so according to Graham, not to me, so I don't want to raise locals with any of the analysts in the call or even outside there. Please don't. It is Benjamin Graham who was saying, it's not me. So Benjamin Graham was saying, if you want to see if East African Portland is profitable, you would be interested in taking the profits from non-operating activities, and then you deduct from the profits that we are reported. So we take 1 billion and minus 3 billion, and that would take us to a loss position. So in this year, they were at 1.3 billion loss. So if you deduct 600 million, then this gets us to a loss of 1.9. That is a better picture of whether your business is making money from its operating activities. So with that in mind, if we go to Acorn Holdings, then you have yourself a value gain on revaluation of investment properties. So it jumps around 90 or 80, yeah, and around 90% from 160 million to 309. So in the wisdom of Benjamin Graham, what did this business make in 2023? So it was 396 minus 160. That was the profit. In 2024, this business made 555 million minus 309. Because what remains there is from their lending activity. Because one, that is what guarantees distribution of income to you. Like if there is anything that you can make, then that will be from there. So you can see the earnings, or the what we call the basic earnings per unit, or the earnings per share. So this was 300 was 121 and 156. But what is distributable was 0.77 out of 1. So the extra is what is fair value revaluation gain. So this is 0.66 that is distributable to you, the shareholder. So yeah, you remember that. Huh? So you don't just say we made profits, but there could be a revaluation gain that is there. So what is important is because the guarantee of growth could be tested over the years, but maybe when it comes to a rate, whatever you just first get is what we call the dividends. So that should be great. If you have yourself a question. So yeah, the revaluation gain grew with around 93%, which oh, thank you, Ella, so much for that link. I was struggling to get the website. Thank you so much. So we have Acorn seeing a 93% increase in valuation gain. So you remember when we were looking at profitability, net profits went up by 40 to 555. So when this is reported, maybe like in the news, or whatever, this would seem like a good thing, right? But you would want to see if those profits are there. So 93% much of that came from revaluation gain. So I believe you are able to make an informed decision with those kind of facts. Yeah, so yeah, strong performance seen there. You should probably monitor debt. It is important. The expenses should not probably be growing to outpace revenues, the growth of revenue. So I would take a percentage growth of expenses and also take a percentage growth of revenue. And if it happens that expenses are outpacing revenues, then there is need to ask questions. So, of course, whatever we have here locally is focusing on students' accommodations, and you could track the performance going ahead if you are interested in jumping onto that. So now here in the local market, we have what we would say a developing sector. So yet we are not yet there. So we have very limited options. So limited local products. We have three restricted rates. So that is the lab trusts, Imala, we have a restricted rate, the Acorn development rate, and also the ILAM Fahari rate is restricted. So the Acorn income rate is only available to. So this lowers the options that I have. That is why probably you would ask whether if you need to go outside there. We could see maybe regulatory improvements as all these challenges happen, then the regulators are always looking forward to improve or come up with more regulations that could help the sector. Okay. Now, the offshore rates. Now, something maybe we could say simple for you to think about it. These are shares of companies that are engaged in real estate. So when I bought the shares of JP Morgan, I bought shares of a business that is engaged in the financial sector. When I bought the shares of Eli Lilly, I bought shares of a business that is in the health sector. Now, if I buy shares of whatever company may be engaged in real estate, then it is the same process. It is only the underlying business, whatever they are doing, that differs. So to invest in real estate, to invest in REITs or shares of companies in real estate, then one of the ways, one of the broker that is available maybe to a majority of investors in Nairobi is IBKR, also Interactive Brokers. That is an international broker. Now, this has some setbacks, especially maybe on the onboarding process due to the complexity of the whatever of the system. And also, maybe the other issue could be they don't have a minimum investable amount, but you'll be locked out. You will have some challenges if you are doing small amounts. So the investor who is investing $100 on Interactive Brokers will always be concerned about the costs of funding IBKR or something of that sort. So there is a need, and that's to consider the amount that you're investing. There's that need, but you can get a local option like HISA. HISA will give you a wide range of investments, unlike Ndove. So HISA app is working with another broker known as Interactive Brokers. HISA is what we call an introducing broker. So if you can always follow our social media page. I have given detailed definition of the same. So either way, you can do HISA or IBKR, or you can invest through mutual funds that are focusing. So you can check out of the many offerings by Standard Chartered Bank if they have a mutual fund focusing on real estate. Now, investing in single stocks is such an extreme sport. whether for retail investors or even for professional investors. If you want to know, then we look at the funds that are actively managed and index funds. And you will always find a majority of the actively managed funds having a lower performance in comparison to funds such as the S&P 500 or index funds of the S&P 500. So single stocks are extreme, and that is why any investor who is getting started, they have a guidance to start with what we call ETFs. These are exchange traded funds. So we have those that are focused on real estate. So we have the NQ, we have the Schwab real estate trust. So you could pursue those from that trajectory. At the start of the session, we had mentioned a few stocks. I don't know if I'll get them. So there is one global late reality income corp and Simon Property Group. So if you want a single stock, then you could pursue realty income corp or Simon Property Group. Please, you could start by the same way we analyze investments like single stocks, or the same way we have talked of the ILAM and looking, or the Acorn and looking at performance with them, something is collective valued or something of the sort, you would want to do that even offshore. It is not one time like you will make it. So you buy a real estate. You know, we said you do away with the dogmas. Outside there, then you'll get rates that are focused in data centers, healthcare. Data center is the most now lucrative business offshore at the moment. And if you're investing offshore, of course, you will have those currency diversification benefits and having investments outside your jurisdiction. So you have local issues in the economy and outside due to the reporting nature that is required in offshore investments, then this provide you, you have yourself maybe what we call sense of better reporting and data. If you want to know what it means to have a company listed in the, like say the New York Stock Exchange, in terms of the reporting that is required, you only need to follow the story of the listing of the Saudi Aramco. They could not be able to list in that market because of the disclosure that was required. So if you are looking for transparency, then that market could offer you it. There's also another advantage offshore. You'll get yourself what we call liquidity advantage. What is that? Now, I'll give this example using the a gold ETF, for example. So in Nairobi, we have an ETF listed, a gold ETF listed in Nairobi, and that is the new Absa Gold ETF. Now, it doesn't have like adequate liquidity. So it is not trading very many. Now, talking of liquidity, you could look at the number of units that have traded every single day. Now we're going to have to wait for the market maker to deliver more units if you want to sell, and there is no buyer, then the market maker would probably need to buy back our units and all that. Now, that is making our units here in Nairobi not to be so liquid. And also settlement in Nairobi is in 2 days. But when you go offshore, I'll just take the example of the SPDR Gold Trust or GLD, an equivalent of the Absa New Gold ETF. That has high liquidity listed in a market that is fast, a market that has many investors accessing it and all that. So offshore rates will, or offshore investments will be offering you higher liquidity in comparison to what we can be able to get here. So good. I will take now a few questions from the chat box. Please feel free to engage in a few questions. So as I had mentioned, you can probably ask real estate general questions. I would be interested to hear your thoughts on the Islam Fahali late. If there's something you would want me to mention, again, I would be glad to mention that. So feel free to engage in a few questions. I would be glad to answer those. Now, something as I wait for your questions, majority of the participants, or a good number of the participants, these happen to be students from our personal finance classes. You can join the community, just come to our personal finance classes. We have our May class will be starting around date 10. You can feel free to join the classes. We'll share the details on our social media platform. It is a 9-day class. We get to look at various investment options, rates being one, circles being one. We also get to talk about investing in the stock market then and see what you need to look out for. If we are floating, when we talked about valuation, you can always come to the personal finance classes. You can, if probably I find people saying, oh, I'm not able to come to the class, and you would want maybe to get insights, you would want to get personal, could help you with the research to make an informed investment decision. Feel free to reach out. My email there, wakamilo2018@gmail. You can also chat me via WhatsApp. So there is my number, 0758 0077979. Good. Let me hear a few of your questions. I'll be glad to answer those. Nani, she's Khadija, one of our students. So when looking for the most important parameters at their function, is it true to say that the revaluation gain can help us decide whether we should invest in them or not? A good question. Now here, if I'm looking at the financials, this company you will look at the financial statements. That is the minimum disclosure documents that they will provide you with. So if you are looking for, as I'm analyzing an investment to invest in, like a stock or a listed company, then I'd go for their financial statements. Is revenue growing? That is one. Is profitability growing? Where is this profitability from? Because one of the concern would be if you have profitability that is coming from something like revaluation gain, this would be a setback. So just the usual way we analyze companies to invest in, then you would want to analyze the rate from the same perspective. Another question, let me see. What is the portfolio of ILAM expect from Greenspan? And now ILAM had at listing had three, or what do I call them? Had three properties. Also ILAM Family. It had Greenspan Mall in Donholm, 67 Gitanga in Lavington, and it had itself Bay Holdings. Though after delisting, we are yet to get a communication from the company if they sold Bay Holdings in Enterprise Load. So I'm not very sure if that was sold, because after delisting, that was removed from their website. The lab trusts, Imala, so this, we say that the units are still on the hand of the promoter, and if there is any movement, is they are sold to what we call professional investors, 5 million and above. This is the owner of Pension Towers. They have, well, there are some of the properties showing owners. There are some of the properties in the portfolio is Pension Towers. They have other a range of properties, but one of those, the biggest, is Pension Towers. You can always check the website. You'll find the other properties that they have. Okay, good. So Um, Maybe would just mention something the real estate in general. Please get rid of the dogma, but do your due diligence. If I was to buy a piece of land, I would engage the experts around that area, value a surveyor, professional surveyor. Even if it is to buy a piece of land, now we know what we call speculation. Like we would have a railway line or something of the sort passing. Now, when you speculate, anything could go either way. So when you speculate, maybe even in the stock market or in land or whatever, then anything could go either way. Then at the point of speculating, you would be willing to take in the risk. So what if this risk doesn't pay? Of course, you would also want to be interested if you decide to build or buy an apartment or buy an off plan, you'd be interested to look at the cost vis-a-vis the cost of financing. Um, yeah, before you checked the recent banking financials, we have what we call non-performing loans growing, or what we call NPLs. And the growth of this is as a result of one of the sector that is contributing a lot to this is the real estate sector. So every other time, and this is some wisdom that we say zooming out. So you want to zoom out and ask the question, why is this sector defaulting? So showing one of my clients the NPL ratios of different banking, and then we are finding housing finance with a high NPL ratio. We are looking at the different banking and looking at what sectors like at KCB, the sector that has contributed highest to NPLs is real estate. So you would want to zoom out every time you check on the newspaper. There is an auctioneer's advertisement. You would want to zoom out and ask, why is this sector defaulting? And one of the things that you'll find there is, if you are working like you buy an apartment, which is giving you a rental yield of 7% or 8%, and you have yourself financing at 17%, then at one point, unless you have deep pockets, you'll be struggling to pay off that loan because the interest is not even covered, leave alone the principal repayment. So this is something you would want to probably think about when you get to real estate. But if anything, don't buy overvalued stocks. So I remember one of the projects I was engaged at recent IPOs was the MTN Uganda IPO, and the client reaches out and asks, "Hey, could you help me here?" And we are working around that, and I say, "Oh, this is overvalued." So it doesn't matter if it is stocks of companies in tech, stocks of companies. Don't be caught buying overvalued stocks or shares of companies. Also, don't be caught buying overvalued pieces of land because it will be 5 years and you are still struggling to get a market, even to get whatever you had paid for that piece of land. I wanted to mention something about offshore. Now, if you are overly invested in Kenya and then you get to ask all these questions, the stability of the economy, the performance of the economy at this time when the economy has been struggling, maybe you could say the last couple of years, then today's age and era due to technology, we're able to invest even offshore. So we have been helping clients diversify their portfolios investing offshore. So it is only understanding what options are out there. So like gold ETFs, stock ETFs that are focused maybe in different sectors of the economy, different segments of the economy. You can be able to do that. The bonds from different countries. So just to diversify beyond whatever is here in the local economy. So when you hear maybe like the investors of bond asking, will the government default? Now, a default won't only affect the investors in these government securities. If we default, then you can bet the currency is impacted. We saw that in 2024, when we had the exchange, the shilling exchanging at around 160 to the dollar. And this brought out what we call unprecedented inflation, because we have what we call lagging inflation. So if you buy goods from outside, they land here at high prices. And somebody who was doing a simple construction had to abandon the construction because the construction materials are coming in at high cost. So when you say, oh, the risk to the local economy, and you ask, like, would we default or will we have problems refinancing our debt? This is not only to the investor of government securities. Everybody, whether you're in real estate, you are in circles, or you are in whatever, you would want to think of how that would maybe even impact you. So when an investor is investing offshore, of course, diversifying from the local economy, investing in another currency, and also probably setting themselves up for like growth. The S&P 500 has grown by 20% in the last per annum in the last 5 years. Also, you can look at the performance in the NSC or performance like rental yields and see if you get an investment that is able to get you at a good, give you good returns. Okay, I don't know if there are any questions. How do you value stocks? Yeah, shares of companies could be overvalued. I could maybe just to answer that question as we come to the end of our session. Now, I want to take the example of the I-Reit. So that stock was sold at 20 shillings at the IPO. Now, 8 years later, by the time we are delisting, these delists at 11 shillings. Though even the performance had dipped because the market prices around 2019, 2020, 2021 was at around 6 shillings or something. So what does this tell us? That at the point of this stock selling, we could have asked the correct value of the properties that they were selling us. So that is the conversation about valuation. There are different valuation metrics, and we could talk about those in a different setup, because we would need larger. We would need more time to talk about that. I think that is the only, when it comes to investing in the stock market, that is the only thing that we get to. If you get valuation, you have this halfway, like you have gotten whatever needed to be gotten almost halfway. If you look at valuation, maybe to give another perspective, just after the President Trump came to power, one share of Tesla traded as high as 400 plus. So the valuation of that business, its market capitalization, was at 1.5 trillion US dollars. Then we could ask, how much money are you making, so that we see how long, what profits are you making, so that if I buy this business at 1.5 trillion, how many times its earnings am I buying it? So you remember the example I gave of a bakery. Now, this valuation had just jumped from around 600 billion US dollars before, that is pre-Trump. So by November, October last year, the business is at around 600 and then jumps to 1.4, 1.5 trillion. So adding almost 800 billion. Now we get to ask, what has gotten so good within 1 month, 2 months, that we have overvalued this business this much? If you get valuation, then you can't buy the Tesla stock at $400. Doesn't make sense. Even buying it at that price, it's setting up yourself for, losses or something of that sort. So it is speculation all over optimism that took that business to that level. So yeah, that is what we mean overvalued. So I don't know, they have a comment there by Beatrice. Thank you. for the insights. Looking forward to hearing from you. I'll be glad. Somebody else, Khadija asked, what is a restricted late? And now, if you go for the development rate of Acorn, so Acorn D-Late, they say that only professional investors who are able to do 5 million. So it is not accessible to anybody else. It is only accessible to that kind. That is what it means that late is restricted. Okay, I don't think I have any other question, and that should bring us to Gideon had asked how much is required. Now, the best thing about markets outside is that, unlike in Nairobi, where you are told you're going to have to buy, say, 100 units, markets outside, you can even buy 1 unit. So now this depends on the price of the share that you are buying. And in US, you even get to own fractional shares. So you can buy 2.5 shares of a unit that is going maybe $400. So with the 250, you have already invested. Good. Most welcome, most welcome. Asanteni sana. And maybe one closing remark or question. I'm glad to take it. With 500, you can now invest in the hybrid, Acorn hybrid late. Yeah, so the developments, as I mentioned, around regulatory and everything, there is there is an encouragement to the regulator. So the restricted rates, the fee is prohibitive at at the fee is prohibitive. So the entry at 5 million, that is prohibitive. So we'll continue to see more and more rates probably reducing or offering different options. So good. Thank you, Kevin. From the discussion, it seems rates have an opportunity in Kenya. Yeah, but of course, this is a developing area. So the only thing you need to do is being able to tell, the way if I go to banking sector and you give me KCB and Standard Chartered or something, so you can evaluate between Standard Chartered, I&M, KCB, which should I invest in? So this is dependent on the performance, the valuation, potential for growth, business strategy. So the same thing I would be doing in rates. So taking rates, like if I go outside and there are so many rates, then I would get to analyze them from that perspective. Thank you. So that brings us to the end of our discussion tonight. I want to wish you all the very best in your investment journeys. Feel free to reach out if you would need something or help or something. We would be happy to help or guide. Yeah, so have yourselves a good night and thank you for coming. Asanteni sana. Good night, everyone. Karibu, karibu. Francis, asante sana. Good night, everyone. Thank you. Thank you so much.